All right, so now let's get to showing you guys how to enter trades as retracements and reversals. So let's erase this. Don't need it. Don't need this right now. So last time we left it was like right here, right? From our last video, I showed you how to enter based on Doji and based on market structure. It's all about market structure, you guys. All about candlestick formation. It's just the exhaustion. Like, you have to understand. I don't know if you guys understood what I was saying in the last video. If we have a bar going up like this, candlestick going up like this, then it shorten up like this. I wish I could draw the wicks. We're gonna draw the wicks, y'all. Oh, y'all didn't know I had skills with drawing. Let's do this. Hi, that's ugly. Yep, just like that. Ooh, y'all didn't know I could do that. All right. Let's do like this. All right. Then it's like that, and then the last one is like this. Let's say the last one is a doji. Right? So what you have I'm gonna play around with this thing. And this thing isn't even that important. But I don't know, I'm just crazy. But what you have is, this is showing exhaustion. Like, you have to understand what that means. Remember what I told you guys in the candlestick video is what the candlestick represent is the price action and the fight between the bulls and the bears, the fight between red and blue, fight between red and green, depending on how you color this. For the sake of what I'm talking about, let me make this a different color. Let's make this green. I didn't want that. Right? I don't like how this don't look like the other ones. Okay. So we have the wicks. So we have, look at all this space. This is what I'm trying to tell you. All this space here, then space is basically, the candles are dying as they go up. Even though this is a buy trend, the candles are dying as they go up. You know what I'm saying? So if they're dying as they go up, this marks the peak of the actual the trend. And what you have to understand is, when you see the shadows, the wicks, all that means is this is the highest point before it got pushed down. This is the lowest point before it got pushed up. But these are the highs and the lows of this particular day. If we're on a daily chart, if we're on a 4-hour chart, these are the high and low of the particular 4-hour. But I use the daily chart because it's stronger. So if we can mark the highest and lowest points, if the lowest point is broken, that just means that there's going to be more sells. If the highest point is broken, that just means that there's going to be more buys. But it doesn't just have to be broken. A candle has to close below this. That's why we go to the lower time frame and we wait for a retest. You remember what I said? We wait for a retest on this line. Man, I always lose this thing. Yeah. That's not supposed to happen. But wait for a retest on this line and for it to continue going down. What that does on a lower time frame, that retest and for it continue going down is nothing more on a higher time frame than this. Is nothing more than a candlestick being formed that's taking out the previous two candles. It can even be, now it'll be something like this. Something like that. So this, it broke the low of the previous day and the actual low of the day before that. So that means the momentum has changed. There's no more buying momentum. So there's sellers in the market. And this also, goes with buying or selling trends. It's the same exact thing. It's just reversed. It's vice versa. So that's why this works. This is the doji entry. So now you understanding the doji entry, you understanding exhaustion of the actual trend, the candlesticks getting smaller and smaller. Then there's an indecision candlestick, a doji. There's the high and the low of the doji for the day, 4 hour or 1 hour, whichever chart that you're on. We mark the bottom, mark the top, treat it as support and resistance. Go down to a lower time frame, wait for the break and the retest, and then enter the trade. You enter the trade, and then you go to the next order block, which would possibly be, let's say, down here. If it's like this, the next order block would be down here. So you'll take the trade from all the way up here to all the way down here for almost a 200 pip trade. So that's why it works. That's why it works. That's how it works. Not a lot of people are not doing this. This is candlestick dissection, candlestick anatomy. This is what it means to understand how candlesticks work. So now let's get back to the lesson at hand, right? So that was just the doji entry. That's my entry. That's how I entry. That's how I enter trades. This is what I came with. This is big fish. It's the doji entry along with, what y'all probably would call Wyckoff, or, Wyckoff came with all these terminologies for trades or for things like this, where you see the spring, the last push, the AR, the support, like all of this right here. It can still, like, this is like, it's probably a doji on a higher time frame, which it is. You know what I'm saying? So like everything kind of come together. So let's get back to the retracement. So okay, so initially we took the trade here and it's going down. We had got, I think it was 200, almost 200 pips as it went down. So our next thing is to wait for a reversal. We're not forcing trades. We don't force trades. We don't rush trades. So hold on. I call this the reversal entries. 1 for reversal signal on higher time frame. Example, doji on support or resistance. Support resistance. So 21. Number 1, we're gonna wait for a reversal signal on a higher time frame. And the example is a doji being printed or painted on a support and resistance zone, or support resistance key point, or previous order block. Right? So we just gonna wait. We don't rush trades, we don't force trades, none of that. If this is gonna take a week, 2 weeks, who cares? We already ate off for this week. We ate. So now we just waiting. So as we wait, this wouldn't be valid. You know why? Because remember, if we see a doji, remember we put this up here like this. This is why I do this. And then we'll put this here like this. Notice this was never broken for that reversal. So that's not valid. So we're just gonna cross that out. We're not even on the reversal one yet, to be honest, because we still have to. Alright, so this is what's going on, right? Whew. My eyes are burning. Alright, so this is what's going on. A doji is printed on where there's a previous order block and a support resistance zone. A doji, that's confluence confirmation 1. Doji being printed, confirmation number 2. It being printed on so the first confluence is a doji. Second confluence is the doji being printed on support resistance zone. The third confluence that we're seeing here is a doji being printed on a support resistance zone and an order block. So this is significant. So now what we can gather from this information, we have more confluence. There's probably another confluence here with the fib. So I'm pretty sure there is. I can tell by just looking at it. And we have a 38% confluence. So we literally have, I don't know why that's there. We literally have, I want a new one. We literally have confluence number 1 being a doji. Confluence number 2, doji on SR, support resistance zone. Confluence number 3, doji on doji on order block. Order block. Zone. And confluence number 4 is doji on fib retrace 38.2%. Oh man, my eyes burning. But so we have all of these confluences. This is enough confluence for us to have confidence that this is gonna go up. So now what we do, we go back to what we do. Which, if we follow here with reversal entry, wait for reversal signal on higher time frame. Example, doji on support resistance or previous order block, which is what we're seeing here. So now we go back to what we were taught before. We got the top and we got the bottom of the doji. We don't need this. We got the top of the doji, we got the bottom of the doji. We go down to the 15 minute. We could even go down to the 5. We go down to 15 minute. If we were looking at this before the doji formed, we would have had a very early entry. How? Like I said, I know basically a lot of setup. This is a Wyckoff pattern. So the automatic rally, the actual support zone being down here. This is a support zone right here, and this is the spring. We could have entered if we would have followed before. If we would have been looking at this before the doji was formed. So this is kind of a sidebar thing, right? We could have entered right here, because we'll know like this is a clear Wyckoff pattern. And not only that, we see, like I was telling you guys on the previous, I was talking about the exhaustion in the market. You see how big push, and it started dying down. You see how it was pushing down big, but it started dying down. Then that just means a reversal is coming. I don't know why I keep clicking this. But back to the lesson at hand. If we use the Wyckoff entry and we attempted to enter this before the doji painted completely on the daily, which we would have known because we would have saw it consolidated doing all this. But we could have gotten right here after this order block was formed. And nice retest. We could have gotten here. But so I don't want to confuse anybody, man. So I'm trying to slow down, but I'm seeing so many things. So alright, so retest. We could have entered here. This will be advanced entry. We could have entered here, put our stop loss below here, and let it shoot up. Or if we're following the doji technique, because there's so many techniques that you can follow, a more conservative approach with a trade like this would be the doji technique, because you're probably comfortable with taking the trade more if it breaks this actual zone. I would have been comfortable with it breaking here because everything is market structure, and I would have also been comfortable with seeing this engulfing pattern, this engulfing candlestick, and this order block being formed here. A nice retest. I could have entered here with this other doji right here. So keep in mind, like, everything is fractal. So everything, whatever can happen in the daily time frame is also happening in the lower time frame. So you can keep catching these things. So you just have to understand the patterns. It's just like learning another language, and being familiar and 100% familiar with it. So our next move, if you didn't take the entry here, that's fine. That's cool. You didn't miss out on anything, because remember, it's still a doji on the daily. It's still a doji. So what we're going to wait for is for it to break out, retest, to shoot up. Just got to speed up. On an official retrace though, like I don't want the baby retrace. There we go. Alright, so seeing it doing this, it touched the actual zone here, the resistance zone. Entry could have been right here. Right when it touched, right when it hit, you could have entered. So I hope I spelled that right. But conservative entry would be right there. So now we have our entry. We're good. Our stop loss will be back into the zone. I'll put it probably somewhere down here. So for this, our stop loss, we're looking at almost 20 pips. For this, our stop loss will be looking at almost 15 pips. So now what we have, we entered the trade already. So now what we're doing, go back to the daily to monitor the trade. So now look at what's going on. This is beautiful. So what we need to find out is when to get out of this trade. That's what we need to find out, when to get out of this trade. Now, this zone is going to be a problem. I can tell. Because wick, order block, wick. So this is beautiful though. It's very beautiful because now what we have is an actual move. We have an actual impulse. So it's giving us clearance to actually use the Fibonacci to figure out where this is going to reverse and how far down it's going to go. So if we go back to reverse entries, wait for a reversal signal on a higher time frame. Example, Doji on support resistance or previous order block. And then drop down to a lower time frame and wait for break plus retest. So we drop down to a lower time frame, wait for break or retest, or we could use the previous another doji or another zone, a wick off pattern to get in. But our next move after we do that, this one. Alright, so drop down low time frame, wait for a break retest to enter. Y'all please take down these notes. To enter, and then draw fib for exit of counter trend trade and entry of continuation of trend trade. So us having a buy trade here is a counter trend trade. It's going against the actual trend. If you are new to trading, don't trade counter trend trades yet. If you feel like you're ready, keep watching this video so you can understand how to do it properly. So as it shoot up, we're going to draw our fib. My first inclination is to fill in the 38.20%. I'm thinking that 38.20% is going to be our take profit zone. Reason being, look at all of this liquidation here. How many times this actual zone has been hit and an order block was formed here and another order block was formed here. So I know this is a significant zone. I know it. So I'll put my take profit right up here for the buy trend. TP for buy. TP for buy. take profit for a buy trend, right? So let's put that in the center. So now if we go down to the lower time frame, so remember my take profit is right here. So we're gonna say, let's say if we did an advanced entry, it'll be right there. Take profit, we're looking at right here. 112 pips with an 8 pip tight stop loss. And then we go down to the 15-minute. Oh, that sucks. You're gonna be trying me. Let's put you right here so you can see you. 15 minutes. Okay. So our target is right here for the 38.2%. Let's see what happens. Let's see if it hit any of the stop losses. I'm not even worried. I already know what I'm doing. So I don't care. This is most likely the 23% zone, which is considered the speed bump zone. Yep. See, I already know this stuff. Like, this is crazy. That's the speed. That's why I call it speed bump zone. It's where the market try to trick you out of the trade, but it don't happen because we're looking at the higher time frame. So they can try to do whatever you want to do. Oh. Going on 30 minutes. Let's see if it hits. Oh man, it didn't hit. Let me see what's going on under higher time frame. Let me see. This will cause a heart attack to some people. But I stand firm on my analysis, so I don't care. You know what I'm saying? I'm good. I don't worry about that shit. When I believe in my analysis, I believe in it. All the way. There's a reason. There's a reason. I understand this. There's a reason. And boom, take profit. So while some people would have got out here because they were scared, I don't play that because now you notice another wick off pattern. But is it really going to be confirmed? So we had a higher high. If you drop fib here, you have almost a 78.6, which I myself consider as a weak retracement, and I figured this is gonna shoot back down. So that's just my opinion. But so we won. I mean, we already got our 100 pips. Let's see what happens. Yeah, it's a weekend now. It's not going nowhere. And the Doji is being painted right on the 38.2%. And guess what? Now that we already got this, that trade is done with. So we followed we followed the steps. We wait for reversal signal on higher time frame, drop down to lower time frame, break and retest, draw fib for exit of counter trend. So the counter trend has been exited. We're good. We good. And now an entry of continuation trend trade. So now we're waiting for an entry for this. Remember the trend, that's why we drew the fib, so we can understand exactly when to enter for a continuation. We knew that this was going to be a reversal, but it's a counter trend trade. So now what we're going to do is rinse and repeat. It's burning. I'm going to rinse and repeat. This is not needed anymore, because we already demolished it. 100 pips, easy. 100 pips, 200 pips, easy. So this is what I'm looking at. So now, two things could happen here. I can aim for down here for a take profit, or I can aim for previous order block zone. I don't even like that, but around this zone, 0% take profit. I think 0% will work just fine, as this is a nice fib entry. So we're gonna scale down 15%. We're gonna scale down. This is where we at. We need it to break down here and retest so we can continue going down, so we can enter our trade. If we see a doji in here, we can take an early trade. This would be a nice one, but I don't know if I trust it. Yeah, I should have trusted it, but it broke out. Now we need to retrace. It went back in. Invalid. Retrace. Yep. So retrace right here. Entry. A retrace entry could have been here, as this candle right here closed. Or we can went even lower to get a nicer entry. So entry would have been like right there. Could have been like right here. Because y'all gotta understand something. As above, so below. My entry would have been right here. Because I understand Fibonacci. So y'all gotta understand, as above, so below. Advanced entry would have been right here. Conservative entry would have been right here. Because right when it did the retest, draw the Fibonacci so you can get it going. or if you want to wait for the break of under the doji, you could do that as well. Right? So now it broke. Our take profit, what we said it was. What we said our take profit was going to be. I'm showing you guys step by step. Other people don't do this. Yeah, other people just give it to you and just run off. But I want you guys to understand it. Take profit. See what just happened? It created an engulfing. Remember I said earlier when we was talking about this, if it crossed the bottom and it creates an engulfing candlestick that basically takes the body of the previous candlestick or the previous two candlestick, then we can be sure, 100% sure, that the sell is valid. So it took, this doji has just been wiped out by this actual engulfing candlestick. So let's see how this ends up, if it's gonna hit target. So like I said, conservative entry. Let's put the stop loss up there. Almost 100 pips. And advanced entry with Fibonacci. This is the actual advanced entry up there. We had a double top and a doji, and that was the resistance zone. But I'm gonna count this easier spot to view where the Fibonacci is at, so we can work with that one instead. 22 pip stop loss. Probably 109, 110 pips if it hit. So let's find out what goes on here. So basically, the Fibonacci has been killed. It's just short of the negative 61, which is fine. But we want to see what this do. So forget the Fibonacci. Fibonacci was just for the entry. Now we want to see if we can get the rewards of this. Oh, stopped out. This trade has been stopped out. Stop loss too close. Stop loss would be better if it was up here above the actual doji, the doji high. So this trade would have been stopped out, the conservative trade, if the stop loss was above this high versus the actual high, the doji high. So be mindful where you put your stop loss. This is just playing games at this point. I definitely would have got out right here because I wouldn't have no patience to be sitting here watching this thing play games. But watch this. 61. Oh, it's still going. Okay. I thought it was the end of the day. My bad. Or the end of the week. I thought it froze. Oh, this thing is playing games. I should just took it to the daily and see what the next candlestick showed. Because this thing looks like it's going the opposite direction right now. It's going wicked. I already had the patience for this. That's why I don't trade Euro USD. I'd rather trade gold. Well, here we go. Hit my take profit, please. This would have been good take profit, though. All you need is at least 70 to 80% of the actual setup for it to be successful. So don't get greedy with your take profits, please, because then you can miss out on good profits. Look at this. Look how close it is. This is wild, man. Come on, man. Stop playing games. But I want you guys to see this. I'm not BSing. This gave you a lot of opportunities to get back into the sell. But take profit. We good. We out the trade. We out the trade. But we're not really out of trade because it can hit the negative 27. Let's see if it does. Let's go to our retest and another retest and another retest. Come on, buddy. There we go. Negative 27 hit. So even if we would have got out at 0 and got back in, would have got another 78 pips. Easy money. So, whew, I'm taking you guys step by step on how to do all this. So this all started out with a reversal. The continuation. Entry continuation using dojis and the Fibonacci. So that's clean money. That's good, man. That's good. But we could have aimed this to the next order block, which is what it's doing. Which is exactly what it did before it shot up. This order block was touched, and it shot up. So that's it. That's the conclusion for this video. Please rewatch it. Keep rewatching it. There's gonna be way more videos, and please take notes. Write this down. You can pause the video and write it down. But this has been a 44-minute video. The other video that I just had before this was probably 48 minutes. So these are entries. This is what you need to understand about entries. Please go back and review what I said about this. Which is this, which is this, which is that, which is this, which is this, which is this, which is this, which is this. Like, it's everywhere on the chart. So, whew, let's get it, y'all.